Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting us today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. And this stream is based on structured trades using Bookmap order flow tools with auction market theory, using the volume profile as a chassis to overlay trades on. So the stream is about how does the market work, why does it do what it does, and how at times can you get in alignment with it. The other part of the Trader Lab is helping traders understand that this is a business, and the idea of a business is not making it up or playing a video game. It is really about understanding the true nature of our business, or at least the way many traders look at it. And that is that it's a gaming process. And I need to start with this. So this isn't about a magic indicator or the Holy Grail, because it doesn't exist. And depending on your approach, you may come into this business believing that it's you get a software toolbox and it's got a bazillion indicators in it. And all you got to do is find the right ones, because that's kind of logical. Why would all those indicators be in the toolbox? Then it's time frames. So it's time frames, indicators, and getting that right mix. And the thing that I think really deters retail traders from being able to transition from, shall we say, the research and discovery or educational phase to the actual business phase is that they spend all their time trying to solve a problem of randomness. Randomness is part of this business. So in other words, what is random? Well, the participant behavior, the rotations, it's all random. And we as individuals who want or are wired to avoid risk and uncertainty try to solve for that because it's in our primal wiring to avoid risk. However, the business of trading is about risk, not certainty, but about accepting risk, managing risk, and then using risk to generate outsized returns. And of course, with risk comes losses and the rest of it. However, if we believe it's about predicting and certainty, we're going to have a problem, in my opinion, because that's what most of us do when we're developing. We're looking for certainty, and the basis is to avoid risk and pain of loss, and of course, the financial consequences. But in the business of trading, don't all businesses have costs of production and overhead? Do the casinos, who only play games that have a statistical edge, do they not pay the gamblers, or do they extract dollars from the gamblers? Do they only play games that have a statistical edge, or do they make them up and use random inputs for how they play the games? Just think about it. That's the basis of the trading business. And the business model that has been proven to be successful is gaming. So does it make sense that if we approach this like a casino would approach its business, because we have a template for a successful business model, that maybe that gives us an advantage over other traders who are hung up on predicting what's going to happen? Just something for you to think about. And of course, like everything in trading, past performance is not indicative of future results. Your mileage may vary. You have to do the work, and that's what we do in Trader Lab. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room, but if we get there, we'll talk, as they say. Also grab a pen and piece of paper, and remember, these streams are available for Bookmap Discord Trader Lab participants, as well as a library of webinars, 60 PDFs of structured trades, in the community, of course, of the Trader Lab. Okay, let's get into today. Now, we had the big NFP report, huge gap higher. Wonderful. Happy days are here again. Now, I'm going to be sharing with you specifically structured trades. Now, there's a lot more in the Trader Lab than I have time to share with you here. But what you're going to see are trades that you can vet. And the idea of vetting is to see what are the conditions where these specific trades, or any trade, whether it's yours or the ones I've shared in Trader Lab, where does it have an edge? And the outcome is always going to be random. So how do you overcome your fear and your uncertainty? Which of course is maybe the biggest obstacle. I believe if you have the capacity and you do the work, almost anyone can learn to trade. I believe you come to trade, and it's personal belief, might not work for you. You come to Trader Lab, you'll learn how to trade. Now, the issue becomes, are you going to be able to execute? Are you going to be able to manage your emotional states? And how do you get that? Now, we all have intentionality. And I know for myself, I spent many years being determined that I was going to do what I was supposed to do. Yet in the moment, it's like somebody else takes control. And I tried behavior modification, all kind. Behavior modification, I mean, a big, thick rubber band on my wrist, and I would snap it because I believed in behavior modification. So I would snap it to try to get those thoughts out of my head. Or when I would, fear and all this, I was trying to get rid of it. It didn't work. I was actually thinking going to cattle prod. I said, well, maybe I need something more than a rubber band. But what I figured out over time was it had nothing to do with the conscious aspect of this. It was because it's a tangible aspect. The tangible aspect is the edge, or knowing you have a metric. Casinos only play games where they have an edge, and they play them exactly the same way. We tend to make things up. We act on impulse. We use a mix of indicators or time frames. One is going long, one is going short, one is who knows, and you try to put all this together, and what you create is ambiguity and conflict. If you have statistics based on your research and extracting, just like the casinos have the edges for their games, that's all you do in trading. May not sound what you think it is, but over time, your job is to extract the dollars from the gamblers. And yes, you will pay the gamblers. So let's get into the open. Now, RTH open, ETH overnight volume point of control. What's a volume point of control? Let's talk basics here. A volume point of control is based on the highest volume in the ETH. Think of this like shopping or a retail price. That's the first piece. Now let's look a little further up the food chain here. We have the ETH high, which has a high probability of being tested. So we have a couple of things. Retail, think of this like you're shopping. Go to the store, trading is shopping, by the way. It's just that it's in a very short time frame versus the supermarket where maybe they put it on sale and then maybe a month later they do or they don't. For us, it's buyers and sellers, rotations, all of those are auctions. So in the auction, this is the fair price. And that's the ETH high probability. Now there's over a 93%-ish, and you have to vet these for yourself, probability that we take out either the ETH high or low. Okay. So, and there's another part of this. If the market has a substantial gap higher, it is possible that we're going to get what's called responsive sellers. That is, traders who are already long or whatever they are, and they want to respond to the gap, take profit. So if that happens, then we are looking to fade the gap, which I understand is something that would make your stomach line crawl and everything else. And that might not be in your plan. But if you understand market mechanics, you would at least anticipate the possibility. And in your trade plan, you would know based on the behavior you see in a short time frame, and I'll show you here, you would either be prepared to sell it or to potentially buy it. And I know you're going to go, well, that's brilliant. Well, now, not really. It's not brilliant. What it is the probability is higher that it's going to go down than it's going to go up. So, and if this is a 93% probability and I open here, are you going to put risk on to go here? And of course, it could go here and take out the all-time high, naturally. But with a gap like we have, maybe we'll get some profit taking. And that's the, if you will say, the basis of the shorts off the open. And this is Trader Lab trading. And again, this might be advanced. I've got to make a little adjustment here to something you're seeing on the chart. I got to get it off the chart. Those green lines, you're seeing them. Okay. So let's look at the first trade. Now, and I narrated this, posted it in the Trader Lab. And by the way, it's not a trade calling room. That doesn't do you any good. But what I try to do in Trader Lab is get traders to think. Now, this is the ETH. We got 30 seconds here. This is a sweep, and our buyers are here. Sweep. Now, after a sweep, and this is one of the a sweep detector in the Bookmap. And Bookmap call it an order flow toolbox. It is not. It is really where you can. What we're trying to do is interpret behavior, and what these green bubbles or red bubbles are delta. Delta is made up of market orders and stops because they become market orders too. Delta does not show us the passive side in the order book. We can see passive limit icebergs, which you'll be able to see them, but we don't see what is going on here until we see the behavior. So because we don't see the passive side, we have to make some assumptions. And that is sweep here, sellers were here, right here. Again, who knows? But now passive is here, no way to know. Buyers are here, and the sweep is here. We had buyers in a sweep here too. Okay, so, but what is different between this and this? Here's what's different. Buyers are here, sweep is here, and we make a new high. That's what's different. Here, buyers are here, and no new high, sellers are below it. So I know I have passive sellers here. Now let's come over to the RTH open. RTH open is here. This is my resistance. This is my resistance. This is the retail price of the ETH. You want to buy S&P up here? Maybe it's too high because I'm below it. Maybe this is too high because I had passive sellers. This sets up the first short. Now I took a short right up in here. I consider it luck because luck is a component in trading. And here's where it is. Market comes up. Now, right here, let's look at what we see. I'm going to be in the micro, and then I'll get into more macro, but I'm going to show you how I think of it. And it doesn't mean anything more than maybe. Write that down. Maybe. Maybe this trade will work. Maybe I'll take a stop. Okay. Maybe if it comes up to here, I'll short it. Maybe. Because that's a target. Retail. So let's look. So I see this. I have my seller here. I break low. I see a buyer here. I'm below the buyer. I come back up here. I know that my sellers are here. Buyers were here. We are below the buyers. They were absorbing, and there's the iceberg. That's the buyer absorbing these sellers and sell stops. Okay. So you can kind of see there's structure developing. Now, this doesn't mean the trade's going to work. Doesn't mean anything. It's just, here's a buyer. You see the delta. Sellers are on this side, icebergs. So now you're starting to see structure. And don't forget this here, too high. Okay? So in the Trader Lab, this is a short. So anyway, I took this, neither here nor there. So now let's follow it. And this is posted in Trader Lab. And again, I say neither here nor there because who knows? So this is called VPOC migration. Now remember, resistance is here and there. And I label these migrations of the volume point of control. And what a volume point of control is, it's kind of simple. It's where the high volume is. And that's a term from market profile days. They actually called it the point of control. And what it was is, and in volume profile, it's where the volume is. Think of it like shopping and it's retail. And let's just take the concept a little further so you understand it if you're not into the profilage. And that is, this is an auction. So what this is right here is what's too high, what's too low. Buyers are here, sellers are here. Whoop, sellers are there. So I'm not paying that. Yeah, but it's on sale. And then what happened over here? I'm not paying that. See? So resistance. Now you don't know until you break. Now I have resistance, break, trigger in the Trader Lab, test of the high volume. And what is this? A retail price. If the retail price, high volume, think of your store, shopping, is too high, we can move away from it to try to find too low. And where's too low? Good question. Don't know. So anyway, the trade I'm working here, so you know, is a fill the gap trade. Now, I also know, let's remember, I didn't give you a statistic. This has it roughly and you got to vet these for yourself, about a 78, 79% probability that this is going to get tagged. So I know when I take a short over here that I might have trouble, of course. But I also might not come back there because I'm below it. So, that's it. What are you going to do? So here I get VPOC migration. That's saying this is too high. This now is resistance. I want you to watch behavior. Now, as soon as, I wonder if you're hearing a dog bark. I'm just curious. When this drops down, it suggests the market's going to move lower. When we come across, it sets up, there's two possibilities here. One is we come to VWAP in mid and continue lower. The other is if we come across, then this is resistance. I'm just going to put a little line on here just to help it stand out a little bit. And then if we come across here, that's the structure. So let's watch structure, see what we see. So the possibilities are come up VWAP in mid and mean revert, come back here and fall out the bottom. One possibility. Let me show you the structure. I know I'm in minutia for you guys, but this is how you can kind of read it. I don't use indicators. So what I'm doing is I'm reading the language. So let's look at the language up here. Too high, too low, too high, too low. Retail, right? Retail, we fell out. Now we're down here. This is the new retail price in the auction. What do we do? Too low, too high, too low, too high. Too high, too low, too high, too low. Retail. And out here is something called a low volume node. In other words, an outside edge. Think of it like when you have a consolidation and you fall out of it. It's like a breakout. Well, we're rejecting this level at the moment. Now, if this is where the higher volume is, right here, this is the new retail price. However, that's too high, but maybe this becomes too low, and there's no way to know. It's part of the joy of trading. The outside edge of this distribution is out here. You see the low volume, and you could see it there. So I'm just going to label this. I'm going to call it, and I'm in minutia just to show you how you can potentially navigate. And by the way, please post your questions. I can't look at them right now. They're on different monitors. But so you get mid VWAP, and here's the possibilities. Come here, come back here, fall out the bottom. Come here, maybe rotate, squeeze up, come back here. Rotate back here. Come here, get through there, go there. Those are all the possibilities. So let's see. Come here, nothing going on. Come here, go through it. Now we're looking for this. Okay? So, now for me, I was in a short. I'm just saying me. Doesn't mean anybody should be short. I was thinking to myself, why are you short? I'm going, well, because it's my trade plan. What do I know? So, and the reason I say what do I know is I can't predict. I'm very careful of the words I use, and I'm careful of the words that are in my head. I never say it will. I say it might. It's very important, even your self-talk. What is the voice in your head? And you're in this business, you have to be attentive to every detail, every one. Your self-talk, if your self-talk is saying, hey, I don't think this is going to work, so you don't take a trade, what is that? That is your psychology, your mental state, which we all have, your fight and flight. I don't think it's going to work. What is that? I'm avoiding the risk. I am responding to uncertainty and fear. By the way, if you haven't noticed, This is completely uncertain at all times. Write that down. When you're looking for certainty, you're looking for something that doesn't exist in this business. If you can't have certainty, then you need to teach yourself that when you're trading, you're in a uncertain environment that never has certainty. So you can't solve uncertainty. You need to solve how to operate in uncertainty. That's what the Trader Lab's about. Understanding the business and market mechanics. So this was too high. So this would be a target coming up. And you'll notice where we came. Right there. And we didn't tag it. Now, I don't know. So for me, I'm out of my short and I'm going, oh, that was nice. And the emotional part of me is going, well, you should have got long. You ever have that thought? But that's the chatter in my head. I didn't have a long, so I didn't get long. But I was thinking about it. I'm going, well, I guess that's that. Except this is the resistance. And then if I got through it, then this would be my target. Again, I don't have any longs. I'm just going, well. So here is microstructure. I'm going to show this to you. Now, I post these trades, some of them, not all the trades I take in Trader Lab, but I try to focus on structure because it's the most important thing. So, and the idea in the Trader Lab is that traders can learn to understand market mechanics, how the market works, why it does what it does, and of course it's random anyway. But when we see this here, it gives us information. Now let's look over here. Came up here, didn't get here. This here is a consolidation, break high. This is resistance, break above it, going to, wherever. This is resistance, the next one up. And for me, again, I don't have anything going on. So right here, I see icebergs, and I don't know, up, until it doesn't. What happened right here? This is micro high volume. Now, I can't do anything with this. It's a consolidation. Passive side is up here, and I don't know anything. I am clueless. Not ignorant, just clueless. So I have micro volume here, buyers. I got buyers here going to the moon. Going here. Why not? Right here. So I have micro, and I don't know anything about this until here. Now I have sellers below these buyers. So that's the antenna now is like up. Where's my buyers? Trapped there. These buyers now are under the bus. Sellers are taking control here and here. Now there's sell stops and maybe shorts. I don't know. Where's my buyers here? They're not above these sellers. This last seller here, and we know sellers are there. So I'm looking at this. I'm going, I get more selling. Now, the thing we never know, of course, is it just a counter rotation with a continuation, or is it a reversal? They all look the same initially. So right here, I see a big sweep, and that certainly gets my alert. In other words, big selling in here. So this sets up a short for me right here. So right here, it's a suspect. I don't know. I'm going, I don't know. So I've got high volume here. And what did I have that was resistance coming up? Let's come back. This right there. So that was my resistance. Remember, resistance becomes support, and support can become resistance, support, break, big selling, icebergs, everybody's running for the exit. Okay. VPOC migration in the developing time frame. This is where the high volume is, and I have resistance here. So let's watch. So this is resistance, don't forget. I break here, I pull up here, and I have mid, VWAP, and VPOC. So right in here and out in here, these are my outside edges for potential consolidation. In other words, let's look at this. I fell out of this up here on top. Who knows? Now I have this. And up in here was where the fair price was previously. So it's a support level right there. If I fall under it, it's saying, and it's a language, too high. So again, support. I break under it. I've now rejected this level, which is this. So now I have this. The VPOC shifts up. Now, right in here, it's either going to push off or break down. Now, what I know is I've fallen out of this, and of course, what's up above, but clueless about that. But this is important. Watch. This, I took a short there. Why? Too high. Why? Variable high volume node. From where? Over there. Does that make sense? So I have my little line on my chart. I saw the sweep and the change in behavior. I come back over here, and this sets up. Now I'm kind of in multiple time frames as you think of them. I don't think of time, but because I'm using volume, so it's not a clock-based process. It's really a volume-based process. What I know is this was support. I blew above it, fine. And as far as I know, we're going to the moon. Right here was too high. I reject it. I come under this, which is support. I break low. I come here. Now, right here is retail. Two possibilities here. I can hit here, push off, or go through it and come to the other side. And I don't know what it'll do. If you know what it's going to do, DM me. We'll talk. But right here is where my resistance is. And this was rejected, and this is the next level. Now I'm going to use the order flow. And I hope you're getting something out of this. Let's go. Resistance. Buyer. Going to wherever, right? Oh my goodness, it's going to 1 billion. Icebergs and absorption. Right here, this is the absorption detector in Bookmap. I really like it. Not to mention I like a lot of stuff because before I had Bookmap, I was always late because I was waiting for, well, call it bars or candles or something. Actually, it wasn't. But it was Renkos and different stuff, in a very short time frame. But I couldn't see this. So I see the sellers here. So what I know is buyers are here, sellers are here. What I don't know is, and think of Pac-Man, which I think is a good way to think about this, are the buyers going to consume the sellers, the icebergs, or are the icebergs going to put a cap on the buyers? Which side right here? But here's the other piece. I'm in alignment with my location. So I see my sellers take over. We are below the buyers, and there was a seller here in the icebergs, okay? So this here potentially has alignment, and it's too high. There's my break. This is my entry. What I do, and I'm not saying this is anything anybody else should do, I look at the high volume structure, this, I look at that, and I missed this. I also know I can come right back and take this out. If that happens, I take a stop. Welcome to trading. And I get short in front of this by 2 ticks, and I have my stop initially over here until I break away. When I break away, now I'm good, maybe, and I can pull my stop. Here's another entry. I'm going to use the same process a little differently. Let's assume we see this and we're going, what's going on? My support is here. I pull back here and I'm waiting because I'm developing trader and maybe I can't read this quite as well as somebody who's been doing it a little longer. I've been doing this probably longer than most of you, going on 45 years of trading. So I have a little more experience. It doesn't mean anything more time. It doesn't change the outcome of trades, which is still random. So right here is too high. microstructure. The next area, let me bring it over back where it was. This is called a chart volume profile and allows me to kind of zero in on structure. And it's only what's seen on the chart. So I can, and this shows you everything. So I can see, this kind of thing here. That's all the volume. But right in here, I can see micro high volume there. And now that we're down here, I have high volume there. Think of these as fractals. Let me show it to you. Well, get over here. So you have that and that. So what this becomes for me is resistance, as you know, and now the volume is here. This is another distribution or a little fractal. I call them fractals. Think of them as Russian dolls. Higher time frame, lower time frame, micro time frames. They fit inside each other, don't they? That's how you guys think of time. Well, I think of it a little differently. I think of fractal. This fractal and this fractal are inside the bigger time frame, the developing time frame. You see, so it's really the same. It's just put together a bit differently. So this is too high. Here's the volume. This is now an auction. It's a consolidation. Watch. Test here, too high. So we're waiting, right? Because right here you think you're going to lose your breakfast. And you're waiting for, quote, more. And it's hard to execute here. So where's this volume in here? This is too high, so that's your resistance. We break, trigger. This is a trigger for me, but this could be your trigger. Doesn't matter. And where's the volume in here? It's here. You could sell this and put your stop here. It's not all that different than what I was doing, but I was selling here. It's not that different. And I typically would not sell here unless, it's only because I've been doing it a long time. But if I was learning this, I would be selling here and a stop would be here. And that's still very palatable stop. It's just a couple points. Then what you need to do is get below this. Notice where we're coming, okay? Once I break here and I test here, if I can't get back above here, then you strap your helmet on and off you go. So that was narrated in Traderland. Now, 78, potential support. Won't go into too much why because of time constraints. Overnight mid, full session VWAP or targets. And then there's more. 62 is another target, and then the gap fill. So now let's look here. Any questions? I'm going to come up for oxygen here, by the way, guys, and check out if you guys have questions. Hope you're getting something from this. How are we doing in YouTube? Please give a thumb up if you're getting something out of this in YouTube, a like, I think they call it. Okay, I don't see any questions. I'm going to continue. So let's look over here. So anyway, the short, and now the thing becomes, what do you do with this? Do you just hold it? This is another target and the gap fill, or do you have a trade management process? Yesterday's high, I think was, where is it? Oh, gap to settle. Gap to settle inside of yesterday's. I think it's here. Doesn't matter. Gap to settle is a structured trade in Traderland. Notice the current low of the day. Settle. So that's the target. And you don't have to hold the trade to this, of course. You manage your trade. Now, how might you manage the trade? Just a couple ideas. Micro, high volume. There it is. What is this? Watch it. You're going to see something that's generic. Sellers are here. Buyers are here. Break low. Sorry, Charlie, too expensive. Let's put a little line over there because this is an auction. Too high, too low, too high, too low. I'm out of here. Too expensive. Now what? Watch. Now we're coming down and I'm seeing absorption and there's buy icebergs down. So I'm just saying is the fact there's absorption is not any reason to get out of the trade, but it is a reason to keep your, to pay attention. I'm below this, so that's important. Sellers, 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 sellers. Being absorbed. Now, trade management is an individual thing. And the sense for that is one of our traders, let's just say I can be short, you can be long. I could be trading a shorter time frame, if you will, or fractal. So I could be actually selling this coming back to here because it's fractal. You might be saying, well, I'm going to get long. Doesn't matter, does it? As long as you have a statistical edge. So for me, this is resistance. I see my buyers here. These sellers now are absorbed, and there's the absorption detector. It creates a counter rotation. Now let's look a little further. Out here, this is an outside edge. In a distribution, remember how this works. Too high, too low, too high, too low. When you break away from a consolidation, it doesn't consolidate, it just rips. So what the market has a tendency, in quotes, to do is come back to that area that was not auctioned to check it. And often what we'll do is we'll come back in and then fill it in or go past it and then either continue or reverse. Nobody has the answer to that. It's part of the thrill. So this is an outside edge. So we come back towards the outside edge. And right here, if we're below this, and out here, the thing with this is there's no precision. Then we are in a condition potentially called mean reversion. If you think of this as its own auction, and this is now the retail price here, I'm going to put a little line on it, and we come outside somewhere and we see a microstructure, it's all up to you. You could actually be selling this to here and a continuation lower or not. Or you use this for trade management. In other words, you can put a stop order here. So let's see what it does. So where do we come? Let's look. Here it comes out. In this trade, I got out of this. Actually, I think this is where I exited. And it came up here to my level that's here, and I put the trade back out again. Going for settlement. And that was the short. So that's the shorts down to here. And then the possibility exists it could go here too. But you have to settle. Does everybody track it on the shorts? How we doing in YouTube and how we doing in Trader Lab? All right, thanks, Lucky. This should not be here. This should be here. Okay. See what we have here, so you understand, this is too high at the moment. Doesn't mean it'll stay too high. Market can also come back and, do anything. The outside edge is here. That's called that low volume node. Okay. And that's because we came up here and then we auctioned down here. So now we have this is an auction. There's a low volume node there. We have this and they're sequential. So in a way, it stair steps. It's rotate, rotate. So if this is too high, we rotate, we leave it. We rotate, we leave, and see, goes, goes, goes. When it comes back the other way, it can then stair step up coming back. The outside edge of all of this is up here. Now, it is 9:30 Central Time, and we have a couple trades here. Now, this gets interesting. Of course, when I say it's interesting, it's because depending on your time frame that you trade, you can take this and break it apart into pieces that you are aligned with psychologically. Some traders want to trade just kind of like subway purse snatchers, in, out, rotations, 4-point, 5-point rotations. Other traders in Trader Lab are going to put this short on and ride it all the way down to settlement and ride through, the rotation or whatever. Other traders would be taking the short I showed you and use trade management and potentially get taken out of it, like I did, and then just put it back on again. But that's their plan, and I just do my thing. Everybody finds their groove. My groove is more of a larger rotational trader, but I scalp by scalping. It's not really scalping. I trade short-term fractals also. I just do whatever the market presents that has an edge for me. So anyway, this is another short. And let's look a little more at this thing. Remember why it's a short. Location, resistance, right? So if resistance is here, and I come back here, my risk is over here. So my stop would go here. So I can get short here, and my stop's got to be here. So all these are shorts in the Trader Lab if it's in your plan. And we're going for the settlement. Now, we come in here and you see the sellers. And what do we see here? Absorption. A lot of absorption here. Right at the settlement. What do you do with that? Well, we had absorption there. Is there a difference? Look at it. 1,000 icebergs. By icebergs. 1,000. Does that get your attention? That's why I use a stop and iceberg detector. Because I can figure it out if I have the absorption and I don't see the number, but I can also have more insight, which I guess the way I think of it is more is better as long as it's not conflicting. It's not more indicators, it's more information. And it's supporting the target and get out of Dodge, Now, let's assume you don't get out of Dodge. What do? Let's talk about managing the trade. Buyers were here. Sellers are still in control. That's too high. Let's put a little line there. And I'm going to take these lines out of here in a bit, but I just want to show you fractals. What happened here? It's too high. These buyers are under the bus. Sellers are in control. Sellers are here. They're getting squeezed right here. There's your resistance. Right here, I check. Sellers are below that buyer. I want you to see how I use this. Sellers in control. A buyer tries here. Not so good. We come down here. Sellers, buyer here. Not so much. Seller, buyer here. We're not above these sellers or that buyer. That's resistance. Sellers are here. Now here I get a seller and look at the sweep. So not the sweep, sorry. The absorption. So I have conflict right here and it's either going to fall out and keep going or we're going to counter rotate. And it's going to happen right here. There's a sweep. Don't forget this. I got a sweep. All this is, and I got my sellers here. Okay. I break high. This is suggesting trouble in River City. Not yet. And this is where your teeth chatter. You ever been through that? And I see my sellers. Now, there's less sellers here. And basically we're testing this. And at this point, I have no idea. This is really resistance right here. Sellers are here. Let's look at the different behavior. Sellers are here, we get below it. Buyers are here, we are above it. Sweep is here, we're still above the buyers. Buyers are here, sellers are here. Buyers are here, sellers going to zero. What happens? The buyers that are here are still here. Passive. You can't see them. I can't see them. What do I know? There's my buyers. Buyers are here. Buyers are here. Sellers are here. Sellers are here. They're stuck because of the absorption support. And it could go below and come back, who knows. Buyers are here. Sellers are here. Buyers are here. We're under this buyer. No bueno. Now, sellers are here. So the buyers are here. The sellers are here. Right here, it's going to either break and we're going to get under these buyers, or we're going to break the other way. And when it breaks the other way, that's the end of it. Okay. It also sets up something called the IB failure. Now, the IB failure is a structured trade in Trader Lab, and it has a couple targets. It's a mean reversion trade. So what that suggests is the possibility to come back here. However, where's our obstacle? It's here. So what do we know? If there's sellers at the mid in the VWAP and they're moving down, is it possible that we will come back and squeeze the mid in the VWAP? And then if we get through, we can come here, but we got to get over the low volume node, remember? So I'm putting these pieces together. And again, I'm clueless. So the IBF is along, and traders in Trader Lab took it. And let's watch it. Your target is here, primary. And why? Retail traders keep their sell stops at the mid in the VWAP, and they mechanically sell the mid in the VWAP. So for me, if we take the IBF, that's a target. Now that's the primary target because we can get retail selling here again. So it's primary because and what else do we have? This. So I know before the fact, this is a structured trade. You'd be looking at it, and this is what sets it up. And then this. So you have antenna up, location, break, and then your break. So all these this is a long. You could be let me show you the microstructure just to help you see this. I'm going to go back here so you could kind of see. So you see what this volume is? This is really where the fight is. This is a consolidation. Sellers are here. I should say sellers are here, buyers are here. Okay? And we don't know. There's your high volume. This is the outside edge. So think of it like this. Too high, too low. Too high, too low. Retail right there. Looks like it's going to go down, right? Going to zero. Too high. Watch. Now, don't know. Break high. Where does it come back? Here and here. This is your long. I mean, you could have just got long down here if you want, but this is a structured trade in Trader Lab. So now you're going, for up to this. To here. Then you're holding or managing, because right here, we don't know, of course, ever, are we going to get over this or are we going to come back down? That's the unknown. So anyway, that's along to here, and then trade management here. Now, here's another hint. We're coming up towards mid in the VWAP. You notice the absorption detector starts going off. 500 icebergs, 1,600 icebergs. All of a sudden, we're seeing the selling. Notice what we had down here. The buying. Big selling at the mid in the VWAP. Buy stops are coming out. I mean, look at this. 1,600, 500, a lot. So this is why it's a target. Now, we don't know. This is the next target. It could come up here. But remember where the outside edge is. Here, this is resistance in my world. And resistance is there to get taken out or not. So let's watch. VPOC migration. Now, that's saying, in the language of the market, since I don't use indicators, this is a foreign language. And yeah, it is foreign. How do you learn to speak market? That's what we do in Trader Lab. So I label this, and it becomes a target if we come back across. different. But now, right here, this is the new retail price. Two possibilities: continue lower or come across. If I come across, it sets up rotation. To where? Where the stops are. And where's the outside edge? It's up here. So right here, it comes back to the IB. And what is this? What was too low? You do remember, wasn't it over here? This is the IBF trade again, and it's the same trade. It's going from here to there. IBF, once we come across, it's along to there. And this is the next target, not a recommendation. It looks like we're current. This is also a variable high volume because I guess we were down here. Now we're current. Do you have questions? And I'm sure you're looking at this going, what the heck is going on? What's going on is, for me, what I found out many, many years ago was that the indicators were my problem because I was continually curve fitting. And first it was just indicators like you guys. And this is going back to 1980. So they were kind of new. And, oscillators and the typical stuff. And, Fibonacci, Elliott wave, I go on and on and on, not important. So I started with that stuff and I thought, well, this is how you do it. Also, I learned classical bar charting, so it's measured moves. So I thought, well, you predict it's going to go here, it's going to go there. So I got into this thing of prediction, not understanding that it has nothing to do with the business. But I learned when at the CME, I learned classical bar charting. We didn't have candles back then. So it was open, high, low, closed bars. So that's how I started. So I went on this quest for years of predicting because I thought that's what trading was. And then with indicators, trying to predict better. Same thing you guys do. We all do the same thing. But what I kept finding was that it was completely inconsistent. I'd have runs of winners, think I was doing okay, and then it would break down. And then I say, well, I got to tweak it and tune it. And I go back and I'd look at this. Okay, well, this should be an EMA instead of a 20, maybe a 9, whatever, I stochastics. By the way, I shared an office with George Lane. He created it. Shared an office with him. I did think the Holy Grail showed up. Oh, look at that. It crossed over and the market went up. Oh. So all of that, so I was what I was doing, and I created a term was called Trader Groundhog Day. This is too high. This is too low. This might be too high. If this is too high, we can come back here. Or let me give you the ors because there is or this is too low and we come out, pick these stops out, and then potentially come back here. That's called mean reversion. So I know based on market mechanics what might happen, not what will happen ever. Outside edge is here. Resistance is there. So we have an outside edge. Look at it this way. This is too high, and somewhere out here, part of the joy, is too low. So we can come here, and chances are, since this is here, to get stops under here, and then potentially come back there. Now, is there enough range to trade this? Yeah, maybe. If you can execute, it's not a recommendation because I don't know. There's no certainty in this business. There's only maybe. So I know there's going to be stops here because it's a swing and retail traders run their stops tight. And then after the stops come out, I'm going to be looking to see if I have absorption. So 116 stops came out. That's the guys sitting over there. Now, either we come further out or we're going to come right back here. Let's see what it does. And these are not recommendations. This is market mechanics. And it could do anything. Not my job. I have my sellers here. I've got some buying icebergs there. Let's watch it. I'm at an outside edge. Now, there's no precision. This is, we all want that. Unfortunately, wrong business for precision. So we're looking here at a microstructure. It's right there. in alignment with this, and you want to see if we get a trigger here. Now it could just keep going. So there's sellers are here, buyers are here. If we can break above this, then potential to that. Let's just see what happens. So there's no trigger. It's a suspect because we got to get above this guy. Not doing it. Let's watch. So there's nothing here. It's a suspect. Let's watch. There's no precision. Buyers are here. Sellers are here. I'm still looking at the volume here. If I get above this buyer, then the possibility is to come here. Let's see. Microstructure is still there. You see it? Now we're looking at this, not a recommendation. Now this, you can see me doing this, right? And what am I doing? I'm reading it. It's a language. Doesn't mean that it'll go anywhere. It could just do this and then you do, what's that called? You take a stop. If you're using microstructure, you could be taking longs, not a recommendation. I always got to say that. I'm used to saying it. Because it's really about disclosure, and we're not a trade calling room. It's about helping you understand market mechanics and then developing a plan. If you understand how the market works, you would understand why we might come back here. We'll see what it does. Doesn't mean it will. I mean, it's like any other trade. You put on or I put on. It's always maybe. Does that make sense? You guys tracking? Thanks, Moonwalker. So we're now in real time. And I'm explaining the structure and interpreting participant behavior. Think about this. If you think this is a long, where would you want to enter? Would it be here? Going for there? And I'm just saying I'm not saying this is a trade anybody ought to take. I'm just saying where would you want to enter? If you're using something, an oscillator or something, whatever your favorite thing is, where would it get you long? Would it even get you long? I don't know. Would you be long up here, or would it just be starting at where? I have no idea. I don't use them. But what I know is if this is too low, chop, 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 auction, I break above it, it is a rejection in the microstructure, think Russian dolls, of this. If this is the retail price in the developing daily time frame, then the possibility is to come here. If I come there and I get above it, then the possibility is to come there, squeeze, and then come up into this low volume area out here. If I come through this, I can go higher up into here or out the top, whatever. One piece at a time, right? So that's an example of how you use order flow on top of the volume profile. So it's market mechanics, order flow, using the volume profile as a chassis. And even when I'm in these micro time frames, it is all based on auction market theory. Okay, so this is our support. This would be your long, and this would be your target. And then it's either works or you take a stop. There's nothing more to it than that. And the reason I say that is not to be flippant, but to say is we can't predict what's going to happen next. All you can do is try to understand how the market works with some kind of vetted process. Look for locations that fit your plan so you know where your stop goes and your entry is. This is, I think, an affordable trade. And know that there's a probability to come up here. That's what I know. I don't know anything else. So we'll see what happens here. Any questions? How are we doing in YouTube? Are you guys conscious? Buyers are there. You see the sell stops and there's absorption. So we want to see what happens. If we test this, we break through it, we can come down here. That's as deep as it gets. So let's watch. The volume was here. They were absorbed. We rotated up. This is where the trigger is, the entry. This is the target. And if we break below here, the trade is over. And we are seeing more selling. So we got to watch this. Now, what I typically do, and these aren't recommendations, I don't put my stop right there. I keep it like a few ticks below. The reason is I've been picked off so many times. What I figured was, let's assume there's a buyer here. That's the thought, right? If there's a buyer here and the market comes down and comes below here, is it possible that the buyers that were here, if we come down and pick these stops off, is it possible they will re-engage and take advantage of a price? If they said, hey, this is a deal, I want to own these S&Ps here, and the sale, you can buy an S&P for a quarter less over here or a half, would you buy it? Yeah. And then where's your target, right? Are you guys seeing this? Is this making sense? This is Trader Lab. How we doing? Now, this might not be a trade you want to take. I'm not saying you should, but for me, being long from here to there is okay for starters. You also can scale at the VWAP if that's your thing. For me, this is my thing. This is more important than the VWAP. But you could scale right here because you'll get VWAP sellers. Just saying. So the trade goes to there or to there. And this is the IBF, right? No, we're not. Forgot all about it. What this is we had that. And what we're doing here is I'm in a fractal. So what I'm trading is like out here to here and then up to the top. Let me bring it back. So what I've done is isolated this. So I'm inside. So what I'm doing, this is called trading in fractals. Now it's a bit advanced, and then if you're looking at this and saying, well, how do you know? First of all, I don't know. The other part is I do know how the market works, and I do know structure. That's what the volume profile is about. It is participant based. In other words, it's the volume of the participants. It's not there's no indicator. What is an indicator going to do for me? Well, I don't know. Might do something. I don't use them, so that might say something. You can, of course. So the buyers absorbed these sellers. So that's what set this up. So the absorption was here and the buyers were here. The location is here and this is the target. Now we got our buyers here. Now what the thing about it is, when you see the sellers and you see the buyer, the absorption, which is this iceberg, and the sell stops. So you have the sell stops being absorbed. There it is. Can we get back above this? If I can come across here, this is the mid. There's going to be stops at the mid. And where's my outside? Remember, it's out here. I could just be taking this trade. Here's what you can do. When I said, if you're a quote scalper, I don't know what a scalper is. I mean, I do, but you know what I'm saying. That's defined by range and time frame. This trade could be just from here to there, or here to there, and you could be done, and you cash your check, and off you go. Or this is your scale, and now you're looking at the mid because there's stops there, and we're looking to squeeze the stops, retail trader behavior, and we have an outside edge above us. If you're trading this from an auction-based principle, this is called mean reversion. Outside in. Then, where's the outside? It's up here, somewhere, and no way to know. So mid, then here. Also, why? high volume. If I get through here, outside edge. Let's just see what it does. This is trading in fractals. For what's a fractal? Russian dolls. Very easy. The big one's the intermediate time frame, and as you go down in fractal, you get to this. The behavior is the same. When I'm looking at an auction here, too low, too high, break, check, long, it's the same as this. It's the same, except now I'm in a higher time frame. And what I'm doing is something called mean reversion. So this is too low, and that's too high. I marked this one. So that's what sets this up. And that's the attractor. The high volume in all time frames and fractals is like the moon. It's gravitational pull. It's a mass. It's a body of volume. And the market is attracted to the mass. And that's why this. So when you have a mass in here and we break it, that means there was buyers. When the buyers are above the sellers, we can now deduce it was absorption, only in hindsight. Then I get my buyer above the seller. These guys, as they say, are under the bus. I come back to the volume, and if there's my buyers, there's my sellers. Right here, it's put your helmet on or wear a life vest. Break high. To there. That's your scale. Here, sellers, buyers absorb. Where are we going? Up. Can you guys see this? Is this logical? This is Trader Lab. This is what we do in Trader Lab. And here's the other piece of this. It's not what I do, it's what you do. If you can understand how the market works, why it does what it does, and how at times you might get in alignment with it, I think you might be able to have a business. And the idea at Trader Lab is to help traders build out the business of trading with a realistic understanding of what it is, not the fantasy. We all imagine what this business is when we come into it. I did. And I found out, and it took me years, unfortunately, I found out that wasn't what I thought it was. So my beliefs dictated what I did. This here is a potential target up here. So the way this would work, and this is kind of subject to your trade plan, the way this would work is scale, trade management, or target to here. If we get through here, we can, now there's more. This was too high. So notice now we have sellers here. So let's watch the behavior. If you're doing structured trades, you're doing the following. You're taking this, you're taking a target here, and you're done. Or you're trailing behind these sellers so you're trailing at the micro high volume. Sellers were here. Buyers overtook them. Think Pac-Man. So right here would be your support. Where's your target? One of them is here. You can be done with the trade. There's your micro high volume. And this is sitting over here from previously when we were up here. Resistance. So I have outside edge. I can do this, come back here, or push through and keep going. Don't know. Here's my high volume. Sellers are here. Sellers are here. Who's going to win? So right here, the antenna is up. If I'm going for higher targets, I'm also managing my trade if it's part of my plan. So I could be done here, done there, or just trail and put on a helmet. And then the outcome is random. Does this make sense, guys? Can you see how this might work? And now I'm doing this in real time. I'm glad I can because typically I can't. But if you visit the Bookmap Discord Trader Lab community, and there's no cost for it, there is a library of webinars. Some of them, one of them I think is almost 5 hours long of real-time narration. You could see this. And the thing about it is, the market is not one-dimensional. In the Trader Lab, we have a couple different plans. One is for directional, and the other is rotational. This is a rotational plan right here. This is what's called mean reversion, outside in trading, right? And where's the outside up here? Well, it's out here. That's the outside. If I get through it, then I'm going to go up to the next location. And if I can't get through this, then I'm going to come back here. I know that. Now, I don't know what it'll do. So take that off the table. How about knowing what it might do? And then we have a term that I coined. You got to anticipate to participate. If you understand market mechanics, you're not going to be like a deer in the headlights. I mean, you might be at times, I am. But most of the time, you're going to at least be able to narrate and understand the condition of the market and also understand where it might have behavior. That's why this is an outside edge, and that line is from back here. This high volume that was too high. Support, resistance, sellers, absorption, icebergs. Trade's done. If that's your plan. Please give a thumb up, a like if you're in YouTube. There's a link in the bottom of YouTube if you're interested in visiting the Bookmap Discord Trader Lab community. It is a serious community. It's not romper room. There is no holy grail. There isn't the one thing you need. There's loads of that out on the internet. You can spend your life chasing illusions and good marketing. The marketing appeals to our need to avoid pain, not to get bit by the saber-toothed tiger. I understand. And if you've been thinking about it, you will too. So if we're wired for this, marketers and all these chat rooms and all this stuff are going to appeal to that. And that's why naturally we gravitate towards somebody else handing us the solution. Well, I'm going to suggest if you've already tried that, maybe that's not the way to go. Maybe you're paying tuition, but you're not getting a yield. I call it Trader Groundhog Day. If you're tuning, tweaking, curve fitting, you're going to keep waking up in the same place. All you got to do is make it better, right? I spent years making it better. I built trading systems so I could optimize it to make it really better. And I always came back to the same place. I'd wake up with the same situation, Trader Groundhog Day. And that is retuning, retweaking, making sure that next time it happens, I'm going to catch it. Well, in the meantime, you'd catch it next time, but take 10 losers along the way, waiting for that curve-fitted opportunity. And the thing is, how can you go back in time and trade today? So for me, this could be an exit or a trade management thing. You could be out of the trade here. Doesn't matter. And remember, this is also another area up here, that high volume. Low volume nodes are outside edges. Remember, there's no precision in any of this. And we can come out here and come here. Doesn't matter. Now, if you're into, I got to catch all of it, that's probably not realistic. For me, and I'm only talking about me, everybody designs their own trade plan. I'm good with this, you see. I don't need any more than that. I think this is a pretty good trade from here to there. What do you think? Would this work for you? About a 15-point trade, I guess, or so. What do you think? Yeah, thanks, Moonwalker. You too. How we doing in YouTube? By the way, this stream will be available exclusively to Bookmap Discord Trader Lab participants over the weekend to review, reverse engineer, screenshot. That's what we do in Trader Lab. There's a lot of work to becoming a career-based trader. There's no simple. I mean, if there was, we'd all do it. Imagine if somebody said, for $10,000. And by the way, you can find somebody that you can pay $10,000 to teach you how to trade. And there's been loads of $10,000 paid out. And of course, those individuals are short not only the dollars they've lost in the market, but the $10,000. But let's assume, what would you pay to be able to build a business and sustainable business in this business? If somebody said, absolutely, you can do it, but you got to pay 10, there'd be a line out the door, because that basically would be like buying a franchise that's plug and play. And for 10,000, now you have an ATM in the basement. We'd all do it. And we do it in many different ways. by chasing illusions and nonsense. And it's out on YouTube and the internet all over the place. And if you go to Iman Trading, IMAN Trading, I think is the name of it, he reviews the scams that are out there. If you haven't done that, you might want to check that out. And you can just go on YouTube, you'll see. I think he does a pretty good job. I mean, out and out frauds, with thousands and thousands of followers, even names you know. Not going to mention any, it's not my place. It's your place to vet everything. In fact, if you come to Trader Lab, you have to vet everything for yourself. There is no holy grail. Not everybody who comes to Trader Lab is going to succeed just the way it is. And it's not that you can't learn the trade. I believe everyone can learn the trade. Being able to trade is another part of it, and that is psychological. Because it's never clear. When you're sitting here at the hard right edge of the screen, it's always maybe, right? That's what it is. It's maybe. Maybe this is where you want to get out. Maybe we're going to keep going to the other targets. Maybe we're going to come out here and get to here. Maybe we're just going to keep going. Maybe we're going to make a new all-time high. Isn't it the truth? It's only maybe. Well, if you know it's maybe, you cannot hold yourself accountable for precision. You cannot hold yourself accountable that if this is just this, and then it goes out the top and you are now out of position, that you, quote, should have stayed in. Your emotional state is you're going to have that noise in your head. I call that Hyde, Jekyll and Hyde. Hyde's the voice in your head. Oh, this doesn't look right. Maybe we ought to bail out, all that. That's all generated from a primal wiring of avoiding the saber-toothed tiger. And the primal mind, if you will, cannot differentiate between your intention and its need to protect you. So it's actually trying to protect you, and that wiring, you might say, is underneath our conscious mind. So it's kind of like a reptilian brain, if you will, and that's why we've survived and had the opportunity maybe to develop as a species. Works really good. Don't step in front of the bus, or you do, you automatically jump out of the way of the bus. There's no conscious thought about it. You know what I mean? It's reflex. They call it reflex. Well, in your mind, this behavior is triggered by uncertainty. How can you be certain right here that this is a short if it was in your plan for a rotation? Now, I'm not saying it's a short. What I'm saying is, suppose your plan said get short here. You're going to go, I'm not sure. Well, of course we're not sure. The not sure is the fear, and that keeps you from actually doing your job. The way you get control over your fear is statistics and understanding market mechanics and potential behavior. Remember the word potential. Then potentially we can counter rotate from here, or just come back here, and continue higher, or not. I don't know. What I'm saying is, we know it's maybe, and I know right here I just came to another outside edge. Well, I may rotate here. So that's why for me, I'd be out here and it's just one trade. It doesn't matter to me. It might matter to you. Your time frame is different than mine. You might just get risk neutral here, have your stop here, and go to lunch and put an order up here, right ahead of this, to squeeze out the shorts. That's a viable trade also. So how do you determine what to do? Market understanding, or maybe number of contracts you trade. So for me, let's assume I'm only talking 2 lots in Trader Lab for developing traders. If it was a 2 lot, it would be there to there to there. Trade done. If it's a 3 lot, it would be there to there to there. Hold for this and manage. See what I'm saying? So in that one, the runner has to be further away, no micromanagement. So there's different ways to do this. And this is kind of the collaborative thing in Trader Lab. We talk about, what are you doing? Well, why did you do that? Why are you getting short? I'm getting long. Well, you could do both. Doesn't matter. Many times in Trader Lab, I'm taking a short, they're taking a long. And I'm going, you know? Why? Because I can trade, because it's my plan, not because of anything more than that. I can trade this rotation. And I might do that. Other traders in Trader Lab are hanging out, they're long, and they're working on their crochet. What's the right answer? It's what's right for you. See what I mean by the short? So it's not a short. I'm just trying to give you an example of how you can slice this into fractals, Russian dolls. Does that make sense? Can you kind of see what's going on? I hope I'm doing a good job of it. How are we doing in YouTube? Please give the thumb up. By the way, let me invite you to the Trader Lab. If I haven't done that, I apologize. In the bottom of YouTube, there's a link, and you can gain access to the Bookmap Discord Trader Lab community, including 60 PDFs of these structured trades and a library of webinars. And there's no cost. Not to mention the community, which is a serious community. So it's not a trade calling room. I mean, we do discuss trades, obviously, but there isn't any of this buy this, sell this. That doesn't do you any good. That's just wasted your time. You cannot replicate what other traders do. You can kind of get a sense of how it works, and then you can isolate specific trades. Like the long off of here was a specific trade. The short down to here was, and who knew it would be the low of the day? That's coincidence. It's not predictive. That was the target. And then possibility to get here. Once you come back above here, you set up the long, and it was back to mid and VWAP, where we anticipated the sellers. And that's kind of how it's working. Now, there is no prediction. What I know is what might happen. And I know why it might happen because of how other traders behave. I call it think like a retail trader, don't act like one. Where do retail traders have their stops? Mid and VWAP. If I'm going to take a long, where am I trading? I'm going to trade the VWAP and VPOC because it's the fair price. Then I'm looking for it to take the stops out of these guys. Then where's my next location? It's out here because it's an outside edge. When the volume tapers off, that means there's less interest. This high volume here was too high. That's why we fell out of that thing. Well, I can come back out here, never get there, or come here, or wherever it's going, it's going. And in a higher time frame, which is everything, this is the target. And maybe through here and out the top, out the hatch, to new all-time highs. It's all possible, but it doesn't matter. If you have a higher time frame orientation, your stop's going to still be back here someplace. And you might get taken out and give all the NFP back. You got to be okay with that. Or you're shorter term with less contracts and you're just, trading in a fractal. Is this logical? And can you see how this might work for you? Well, thanks to E. So subject to your plan, I think of these kind of like sandboxes, distributions are sandboxes because it's too high, too low, too high, too low. What's the whole day? Too low, too high. And if I get through here, now I'm going to be doing this. So if I get through, I can then start looking outside in from the outside edge of this distribution. Right now, all I've done is come up in here and I've got my sellers. So you can see what we had. The sellers were here, reason for my exit, and then whatever happens over here happens, you see. Anyway, I think I'm almost out of time. I'm going to, I want to remind you, I forgot. In the Bookmap YouTube, there's a link down there to bookmap.com, right? And there's something really unique about Bookmap that I've found is they provide education to traders at no cost. Now, look, it's in their interest to help you succeed, of course, and it's also in their interest that you get to see how high-tier tools might help you develop an edge, of course. However, there's something else. There's something called the Bookmap Academy, and that is mentoring and coaching with other traders, with experienced traders who bring their setups and their trade management and whatever, to be reviewed and be critiqued. Now, you have to be a subscriber to take advantage of that. But here's the catch, and it is a catch, and I think the catch is to our advantage. There's a free digital version of Bookmap that you can get free. It's not like other companies say you got to pay for a trial. No, it's free. And if you become a quote subscriber, then you get access to subscriber only streams, the coaching in the academy, and special events that are only for subscribers. I kind of think of it as a loophole, but that's just me. But it's free. And then you get your hands on this. And it comes with data. And I'm a big, big proponent of order flow and specifically Bookmap. And the reason is, and I don't remember when I started using Bookmap. It might have been 2012, 2014. I don't remember. Things get kind of blurry. Almost 45 years of trading. But I could never read the DOM. Back in around 2000 or whenever it was, or late 90s, when we first had DOMs, it was just, I was watching the DOM and I wanted to use it. And of course, that was, the algos were just starting to come in then. And it just really, I couldn't do it. And I just said, I need to do this. And I couldn't do it. I couldn't watch the limit order book and trade. I just can't be in 4 places at once. And so I started doing research and looking for order flow. And I'm just going to say, I looked at some of the other names that you might be familiar with. And I thought that Bookmap had the best graphical interface at the time. There was no color. It was black and white. It was really not what it is today. And so I made a decision to go with Bookmap, and I'm really glad I did, because they listened to their subscribers over time as I got more proficient, and I had to spend a lot of time. Guys, anything that requires effort and study, anything like that, and that includes trading, is not a buy a book, now you're a trader. Let's be serious about this. This is competing at the highest level. You're competing against hedge funds, bank trade desk. I've worked with quants. I've worked with hedge funds. I had my own firm. I managed funds. I have a lot of background in this. That doesn't mean I don't take stops and losing trades. Of course I do. But what it means is I understand who we're competing against. And I'm going to suggest this is not buy a software package, plug and play, and now you're competitive. If anything, you're waiting potentially to become one of those statistics we all read about of retail trader outcomes. You need, in my opinion, it's just an opinion and a suggestion, to do something different. Understand and learn what doesn't work. We all pay for an education in trading. We do. But the key becomes, are you going to keep repeating the course? Are you going to keep experiencing Trader Groundhog Day, doing the same thing that maybe doesn't work? Or are you going to learn from it? And if you do learn, maybe that gives you an opportunity to take what you've learned, reverse engineer it, and don't do it. Because that's what your competition is doing. Hope you got something out of this. Please give a thumb up in YouTube. Remember, this stream will be available exclusively to Bookmap Discord Trader Lab participants. There's a link in the bottom of YouTube if you want to become part of Trader Lab community. I haven't seen a better community in the time I've been doing this. And I think that's a great group. It's serious. So if you're interested in serious and potentially building a career in this business, click the link down in YouTube, come over to Trader Lab, say hi. You have to verify your email to get access so we know you're not a spammer, so we can keep the pristine community in the Bookmap Discord server nice and clean. Thanks, guys. Have a great weekend. Look forward to seeing you over the weekend. Remember, download the 60 PDFs. Here's a quick look at them so you can kind of see what you can get there in the Trader Lab. The library of webinars is also in the Trader Lab. These I did many years ago. I'm not a vendor. There is no specific course. It is a community. And there are structured trades. You can take them, reverse engineer them, and make them into something that makes sense to you. Take care, everybody. Look forward to seeing you on Monday. Trader Lab, I'll be right along to hang out and continue with you guys. See you soon.